Hey guys, it's Jay. Thanks for checking out my trading journey again. It is June 14th, and I want to talk about a paper trade I took on MTBC today. Yes, I did say I took another paper trade. The market was kind of chopping around today, so I didn't feel comfortable getting in with real money. So I more just kind of wanted to see what would happen. The long plays weren't nearly as prevalent as short plays today, and I didn't have any shorts available through SureTrader on the stocks that I was looking at. So for me, it was only bullish moves that I was looking for. So MTBC popped up on my scanner, and I had already marked it pre-market. The pre-market high was right around the $2 mark. It kind of stuffed at the whole dollar there. I like to play that pre-market high breakout or breakdown if it's the low. But in this case, I was looking for it to break out $2 mark and then to see if it would possibly run further. It had kind of chopped around here, and I don't like seeing big wicks on candles. This to me, it says it spells loss, right? If I'm looking at something, I want to see nice, solid, not obviously no wick candles, but little wicks, right? Little wicks to me is more confidence inspiring in the move. So I was looking at getting in over VWAP again to make that move up. And that's not a lot of money. You're talking about, what, 10, 12 cents here. But that gives you a little bit of a cushion before it actually tries to break out above that pre-market high. So if it does kind of reject there, you've got a little room to decide if you want to get out. So this is about where I saw it on the scanner. And I am looking for a lot of confirmation now. If you are somebody that's watching volume, looking at the chart right now, obviously you don't have to be a genius to say, hey, the volume was really increasing here. Well, for me, I sometimes just tend to watch and make the moves, and I don't jump right in because there might be a little bit bigger spread on the level 2 than I want or whatever. And I don't get in on the bid. I always get in on the ask, so I know that I'm going to get filled. So I'll maybe watch them and see if the spread's going to come down. It was probably only 2 to 3 cents, but I don't like to see more than about a penny spread on these cheap price stocks. So I said that my entry point would have been a $1.97, 300 shares. It's kind of my speculation buy. I got in there at 197 and it popped up and then it would have pulled back, which would have been fine. My stop is always below VWAP. That's why I don't like to get into trades that are too far extended over VWAP. I like to be able to have a stop around 10 cents or so because that's generally a pretty small amount of risk. If I can get in for less risk than 10 cents per share, all the better. So I kind of watched this one move a little bit too long. I should have gotten in down here around a $1.90, but as it stands, $1.97 pull back, and then you'll see there's pretty strong selling pressure in that candle, and then some volume came in again. It pushed up and kind of had that false breakout. So I don't know that I would have sold in this candle right here. I would probably be looking for this to make more than 15 cents, honestly. And what would have happened is I would have ended up with a losing trade there. Again, you get this quick pop and then a quick spike down. You've got to be very decisive about where you want to get in and out. If you see a lot of selling pressure, you should think, okay, get out of the trade. I wouldn't have done that. I would have said, okay, let's see, is it going to retest that $2 support level and then bounce? I would be thinking yes, because I'm long biased through and through. So I was thinking, okay, hold it. It should retest, and then we'll come back up. If it starts to stuff again on a double top, then I would think about selling. Well, that didn't happen, right? You'll see it just broke down here and got a little bounce off the 50 EMA. So I may have, it's hard to say. In hindsight, I could say, oh yeah, I might have sold this. I don't know. But the way I see it is I probably would have ended up just holding the thing, hoping that it was going to go up, and it would have stopped me out. Probably on this candle, my stop would have been a $1.87 or a $1.88. And if not on this candle, then it would have stopped me out shortly thereafter over here. So my lesson here is kind of to say, hey, don't get and have a backup plan, right? You might have a price target to make your risk versus reward work, but you should always kind of have a bailout point if you want to break even. So for the commit pay, I need to make at least a nickel per share to kind of have a flat trade. So I should have been thinking, okay, I'm in at $1.97. I need to get out over $2 no matter what. I wasn't thinking that. I was just thinking, I want more money. I want more. I want more. I want to see if this is going to go higher. So don't get greedy. You know, I could have made, I wouldn't have sold here. Again, if I'd have been smart, I'd have sold somewhere around here, maybe 205, 7, 8, 10 cents tops probably. But it would have been a green trade for me. I might have only made 15 or 20 bucks after the commissions, but I would have made something, and it wouldn't be a loser, right? Which would have cost me 30 bucks plus my commissions. Then I'm looking at almost $50 loss when it should have been a winner. So just a little reminder, don't get greedy. Have a backup plan for your exits, even if you've got a price target in mind, because sometimes the stock won't have the follow through to get there. Thanks, guys. Make sure to like, subscribe, and drop me some comments below.